Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. Today is going to be a very exciting day to look at some charts. I think that right now will be pretty much the best time I could have asked for to do a show based on the recent action that we've just had over the last 12 to 24 hours or so. For most of that, I was away from my computer, and I am still definitely shaking out the cobwebs. Had a very late night last night and had a lot of fun with some friends for the Labor Day festivities. And now I am just getting back from the gym and was hoping that that and a good meal would make me feel better. And since that didn't quite work, I have resorted to some coffee and chocolate, which actually has been working really well so far. Just got it off the pot and it is really hitting the spot. My favorite chocolate I've ever had, Tony's Chocolonely. I get this at my local store. I don't know where, how available it is elsewhere, but it's this caramel sea salt chocolate that is just absolutely to die for, and nobody's paying me to tell you that. I just love it so much that I'm more than happy to share with you guys some of my favorites, and Tony's Chocolonely is absolutely one of my favorites. So let's go ahead and get on into some screen shares. Delicious. All right, decided share a couple pictures before we get into some charts. I had a great time this weekend. A friend of mine killed an elk and cooked up just literally the best elk burger I've ever had in my life. A lot of people say that it's too gamey, too lean, so they add some fat to it or another kind of meat. This was just straight elk, and oh my goodness, I've never had anything so good. We were out at the lake hanging out, played poker dice, which I absolutely got my tail kicked in. I was definitely the big loser in poker dice. And then also played some Beersby and bags. I was undefeated in Beersby, and then we got a nice fire going there towards the end of the night. So I certainly enjoyed my time away, and now that I'm back in town and in front of my computer, I am very excited to go ahead and look at some charts. And I guess before doing that, there was one other thing I wanted to discuss. So today I did have to get up early and get back to town because I had a lunch meeting with one of my mentors, and I just wanted to take a minute to talk about some of the things that he has taught me, and also just to kind of mention how absolutely crucial it is to have a mentor. If you're really wanting to improve in any aspects of your life, then there's no reason why you shouldn't have a mentor. And something that's always stuck with me, I grew up as a golfer, and something that always stuck with me is how Tiger Woods was by far the best golfer in the world. You know, in the 2000s, nobody had any idea how to play golf on the level of Tiger Woods, yet he still had a coach and he still had mentors, even though he's the best in the world. Even if you get to the point where you're the absolute best in the world at something, you still need an outside perspective, somebody potentially with more experience, or who you have a relationship with, who knows you in some areas better than you know yourself, because sometimes you don't know if you're really being greedy or if you're really just making hay when the sun shines. Sometimes having somebody else who has come to know you over the years can I just can't say enough about what a good mentor can do. And before Tyler Jenks passed, I had 4 mentors in my life, and now I'm down to 3, which is still probably a lot more than most people would think is necessary, but I even think that, it's time to even bring on 1 or 2 more moving forward. And the one that I met with today was the first mentor that I had, the first business mentor that I had when I was 21 years old as a college dropout with no experience, and I had just got done playing poker for a living, decided I wanted to get into the business world, and he was the very first person who started mentoring me. So we go way back, and it's really special for me to get to meet with him because he is truly inspirational. He's somebody who really struggled to graduate college, high school, really struggled to graduate high school, never even had an opportunity to go to college, comes from very humble background, and started out when he was 18 after high school. He started driving a Coke truck. He'd go deliver Coca-Colas, around. He would drive one of those trucks. And now he is 72 years old. He owns over 80 properties here in the area where I live. Some of them are homes. Some of them are big apartment complexes. Some of them are big banks where he owns these buildings and then he leases them out. And he owns all of those buildings free and clear. And he did that just through setting some money aside by basically living under his means. And every year that he could, instead of upgrading his living style, his lifestyle, he would upgrade his investments. And he has had tremendous success in real estate. I just want to tell you a couple of the things that he has always hammered home. He's told me the same thing from right now today when I'm doing what I'm doing right now compared to when I was 21 years old and starting a window washing company where I went door to door and solicited window washing business. He's told me the same thing from then to now, and it's very, very, very simple and extremely effective. And the first thing is to overachieve. That's something that he believes is that you don't need to be smart to overachieve. You don't need to have any advantages. An overachiever is somebody who has average intelligence or average ability that goes above and beyond. That they get up and they show up to work early. They stay to work late. They do not just do the minimum that is required, and they don't even rest when they did a very good job. No, it's time to even go above and beyond what could even be considered a good job. And that's something that anybody can do, is overachieve. And that is something that he has always hammered home to me, and something that he has been able to show me in his own businesses. We would drive by his business. He owned a land title guarantee company that we would drive by on Friday nights at 7 or 8 o'clock at night on a Friday, and he would point out how the lights are still on, and he would know exactly who is still working, and it would really surprise them if these certain people weren't there at 8 p.m. on a Friday night, because he knows that those are his overachievers. And when he is bringing on employees for his business, he is hiring overachievers. Only other thing that he hammers home is integrity. He says, overachieve, work harder than the next guy, and maintain your integrity. That's it. And he ended the meeting by saying it is very simple, but it isn't easy. So that is something that I've said before in trading, and I won't take up more than our time than I need to, but I do want to say that having mentors out there, having a mentor can be the single best way to improve in areas of your life. I've got 2 business mentors and a spiritual mentor. All of them I go to for different reasons, and every time I have a meeting with any of them, I leave feeling much more motivated and inspired and ready to kick some butt. So anybody out there, I would strongly encourage you to seek out mentorship from people who have more experience or more success in things that you respect. For me, I really respect anybody who is self-made in business, and anybody who has had success in business being self-made is somebody that I want to learn from and pick their brain. And that's where anybody who shares your values and has had success in areas that you value, then take them out for a meal and take them out for a beer. Just do something to try to establish a relationship with that person, and then you have no idea where that could lead in the long run. All right, so let's go ahead and take a look at these charts. I wonder if the live chat's probably just telling me to get on with it. All right. They are slaves, not overachievers. That is definitely one way to look at it, and I don't want to get into this for too long. But for me, setting a goal and doing everything in your ability to achieve a goal is the opposite of being a slave. That is the American dream, and working harder than the guy next to you that's the way to achieve a goal and a dream as far as I'm concerned. So appreciate the input, and let's go ahead and move on. Everybody should remember where I was looking to go ahead and exit this position. And I did just notice one more note that I was recently approved for my channel to be eligible for monetization. So now there are the super chat option available. I will do my best if somebody's sending a tip with a question. It makes it very easy to see, and I should be able to get to those. And before, just a couple days ago, that wasn't available. So I was talking about my position very openly and candidly over the last few days, and there should be no question about where I am. There shouldn't be, and I've been getting a lot of the same questions. Update me. How's the short looking? What are you still in? Or did you get out? Yada yada yada. So basically, I was trimming 10% of my position down here, under 95. I got 10% of the position covered, and then I mentioned that I would be moving my stop loss to break even, which was 10,330 or so. And that is absolutely what I did. But I do not like, often I do not like to have a hard stop loss on the books because there are so many traps in crypto, and there's so many times where you get these freak occurrences that you just do not want to be exiting on exiting a short when the market's really overbought at resistance. So big thanks to Crypto Don Juan for first tip on the channel. That's the first $2 for the Sawcruhteez Streamz YouTube channel. Very neat. Wish I could nail that on a wall like some businesses do. Maybe I'll have to take a picture, and that will be one to remember. Appreciate it. Okay, so that's something where no matter how often I tell people who are watching not to copy my trades and that I'm just trying to teach you to learn for yourself, I know for sure that there are people out there that are going to copy my positions. And for that person, absolutely having a hard stop loss on the books at 10,330 at your break even, which is what I was saying. I was saying trim 10%, move stop to break even. Absolutely, if anybody's out there following my trades, that is the way to go. But for me, I really like to wait and see how the market reacts and see how much time we can kind of spend above this area, because there will be so often where you get one of these wicks that will occur that will wipe you out of your shorts, wipes everybody out of their shorts right before the market moves in the favor. Just time and time and time and time again. So I have been wicked out enough that I do not, I really like when it's possible to trade without a hard stop loss on the books. And that's, for me, stop losses are a form of art. I feel like that is the number one most difficult thing about trading is, specifically in crypto, is managing stop losses. A, managing risk is as important as it gets, and B, not getting yourself chopped out before the position moves in your favor is just hugely, hugely important. And crypto and Bitcoin is so good about moving to areas where are very clear stop losses, like right here. If you're selling here and viewing this as resistance and this is my stop, crypto is so good about wiping out those stops before moving in your direction. So when I'm seeing this action today, I am really interested in waiting to see how much time we can spend above 10,200. And the reason why I feel comfortable with that approach is the spread in these moving averages. This tells me that this is a selling opportunity right here. Specifically when we were under 10,300, when we were up here testing this 200, that was what I was really hoping we would resist right there. But now that we've gotten above it, here's kind of what I'm hoping to see, is that we can't close above it. And if that happens, we would get a nasty wick if this did close back under 10,260 or so. And when I see moving averages with this big of a spread, that tells me this is a strong trend, that this is going to, for us to reverse this and get a golden cross, we need to spend a significant amount of time above 10,270. And holy cow, bunch of good tips. Wow, that's really cool, guys. I really appreciate that. Go ahead and shout out all kind of once. God's Cop, you espouse the Napoleon Hill work ethic. And then Hiken Ashi, good name there. Always good content. I'm happy with your channel growing. Gibbo OMG, I totally went long. And can you review the quarterly chart and trend? Quarterly. Okay, and Martin Williamson, mentor me. I really appreciate that. That is awesome, and I could potentially be working on something along those lines, and I'm actually very excited to share more about that here very soon. Fabric King with the huge tip. Wow, you guys are too cool. This is really neat. Thank you guys very, very much. I really, really appreciate that. Okay. So, Super Chat is bullish. Fact. Woohoo. All right. So let's get back into this action, where right here, what I am really wanting to watch very closely is resistance and closing below on a 4-hour basis, this red line right here, and then getting back below the 200 EMA down in here. That is going to be keeping me still feeling okay about my trade. If tomorrow at this time we are still above 10,300, I am very much ready to just kind of throw in the towel on that position, because if this is just kind of one of these sort of trappy type of things that's getting bulls trapped in and getting bears out of their shorts, if that is what this is, then we should not spend much time up here at all. It should just really be a quick, spike up and then retrace, reversal. And I apologize, I need to top off my coffee. I meant to bring that down, so 1 second. Sorry about that, but this coffee is literally saving my life right now, and it's got to be hot. Okay, so Business of Vintage compiling questions. Thank you very much. Always appreciate it, and I will be getting to those as soon as I can, for sure. Okay, so and that's why I was really excited to do a show here, is because we could see a sharp reaction here in the next couple hours. Like if we're gonna really go the most bearish route, that would be closing this candle under 10,264, would give us a huge wick, shooting star. If that happens, that's a big selling opportunity as far as I'm concerned. If this candle closes below 10,277, below that 200 EMA on the 4-hour chart. Thank you, AB Wells. Much appreciated. Another tip. You guys are the best. And okay, so that would be the most bearish, and that would be like a big sell signal to me. Remember, testing the 200 EMA when there is a bearish crossover is a sell signal. Being above it is a sell signal as well, as long as these are spread out. Here, much different. Right? This is much different because at any moment these could have crossed, and yeah, this was a sell signal, and yes, did I sell that? had already entered, so I don't think, no, I wasn't interested in adding here. But yes, this was absolutely a sell signal, a pull up and into the 200 EMA right after this death cross. But right up in here, it really starts getting scary because of how close these are. Just one move, and this is my alert is still set from this action right here. So I can go ahead and delete that because I now don't care. But you see that when this action was right here, I was very concerned about a move above 10,970 because if that happened, these were very, very likely to cross. And that's when I absolutely do not want to be short, is when these are in a bullish crossover. So here, much different, where now we have the more that we've kind of come down, the more these have been able to spread out. And what I say is that this is a newly crossed moving average. This is an unproven trend, very much in danger of whipsaw. But the more that they spread out, the less in danger it is of whipsaw. And the more you expect to see a move in your favor. And really, so right here, as the price has been running up and into, like when I woke up this morning, I kind of saw us up testing in here, and I was out by the lake, away from my computer, and I wasn't very worried because I knew that really I need to give this 8 hours, 24 hours. I need to give this some time to see how the price reacts to this 200 EMA because this is absolutely a sell signal. And being that these are very spread out, I am feeling confident that right now we're overbought at resistance, and therefore if I'm overbought at resistance and getting a sell signal, that is something I am, interested in exploring for sure. So that's why I definitely did not, I didn't want to get out of my position right here at break even. Like I said, and like if it's you out there watching copying trades, absolutely you should be getting out, because you wouldn't, if you're copying trades, you don't have the experience to let this thing develop. At a certain point, you just have to get out. But for me, I was very concerned about not getting stopped out right here because we are overbought. I mean, this is a big move. Where, what did we move? 10%, over 10%. Let's take a look at that. So we moved 9%, 1, 2, 3, 4, 5, 6, 7 candles. So a day, 9% in a day. That's, in my experience, Bitcoin, when it makes a move, about 10% is the most likely area where it kind of needs to sputter out, at least for another day. We're talking just in 24 hours. If Bitcoin moves 10%, that tells me that I don't want to be buying. If Bitcoin's up 10% in the last 24 hours, that in and of itself is a signal to me that I can't be buying, because I am very confident at a minimum will consolidate sideways. There have been times I've seen Bitcoin move 15% in a day, but that still doesn't mean I ever want to buy if it's up 10% in 24 hours, because when it did move 15% a day, it came back the next day to under, that 10%. So really, I'm the type of person who likes to buy dips or sell hops. Other people are very different. Tome, for example, and the TD sequential will be selling breakdowns and buying breakouts. He's waiting for a candle to go in the direction that he's wanting the trade to move. Whereas me, I like to let the market come to me. If I'm wanting to long, I do not want to long after action like this. And that counts for being stopped out of a short. If you're getting stopped out of a short, it means you're buying. And if you are buying, the same kind of thing applies, where I don't want to be buying this action. I want to wait for at least some consolidation, or preferably a pullback. And in this situation, if it does pull back, then I would be expecting more to the downside due to the bearish cross with these moving averages. Shout out to Stephen M. Another tip. Thanks for all your excellent work. Thank you very much for the support. Okay, so if you did buy this 10,300, because that's where I was talking about moving my stop to break even, then so be it. If you did go ahead and buy that right now, you're looking good. You could sell for even better. Maybe it was just covering out of a short, and maybe now you're happy because the price continue moving against. But if you did buy that, then then I would not expect that to be the best play over the next 24 hours, because I do think, like I said, there's limitations to how much Bitcoin likes to move in a given day, in a given month, in a given year. There are limitations, and I pay very close attention to these limitations, specifically for times like this. And I'm really not feeling too nervous. Sure, this thing could blow right through 11,000 and really make me wish I would have covered my short down here. But as it stands, even if that does happen, the further up this goes from here, the more I would be confident in a following correction. So even if from here we just hammer right up to 11,000, and now I'm really getting underwater, even in that case, these moving averages would still have a bearish crossover and would be acting like a magnet. I say that time and time again. Price above bearish moving averages, these moving averages should act like a magnet, specifically when they're spread out. If they're close, that's not the true story. When they're spread out and the price is above, these things act like a magnet. And I've got enough experience trading this system and enough trust in what I've seen in the past that even if we smashed through to 11,000 right now, I would expect that we would pull back, and I would get out, back around this area where now I would be buying support. If we smash through up to 11,000 and then pull back to retest 10,500, now this was resistance that should become support, and I'm exiting a short after a correction, and we're at support. So that all makes sense. That's how I like to trade. That makes sense. I feel good about that. Buying here, I don't feel good about that because of the likelihood this thing reverses quickly. And if it does, watch out. Okay, and then, so let's just say that if that doesn't happen and we just do that, which is what a lot of people, like everyone on Twitter, that's, if they were to draw arrows, this is how they draw every arrow, is that, so where's the moon? Okay, here, that's where we're going. So let's just say that happens. That's why I have a worst case stop loss. I will have a absolute worst case area where if price gets to X under any sort of freaky situation where it's totally outside of my expectations, like right here, I'd give this like, less than 5% that we smash through. We go from here to 12,000 in the next, day or two, without any correction. I just would think that that's very, very unlikely. But even then, that could happen, and therefore I think it's very, very important to have a last case scenario stop loss. And that's how I like to trade. So thank you, Nighthawk, for the tip. Has recent move changed your daily, weekly view? Nope, not yet. If we do get a golden cross with these guys, it will change my view. If we spend 48 hours above 10,260, it will change my view. If we spend 24 hours above 10,260, it's going to be changing my view. As it stands right now, I think this is a selling opportunity because this is a sell signal, testing the EMA or rising above it, specifically if there's confluence from a horizontal. So for me, I'm short, and this is a selling opportunity, and one that if I wasn't short, I would be definitely interested in taking a stab at this because of what I just lined out. The risk reward is all that I care about. I don't care about anything else other than risk reward. And selling this right here just has beautiful risk reward for me. If I was going to go ahead and enter short here, I would kind of do the same thing that I'm talking about. Is if it does move against me and breaks through 11,000, I wouldn't have a hard stop loss on there. I would look to just cover on the following correction, and I would expect to risk very little. If I got stopped out of this position, this is how I would expect it to happen. Or if we just go sideways, like that, and maybe form like a flag or something. If we go sideways and spend time up here, now these are going to be flattening out and getting closer and in danger of crossing over. So if either of those things were to happen, then you'd probably get stopped out of the short, like for me. And this, again, this is where you gotta, I'm just sharing you how I think, and I'm not telling anybody to copy my positions. And that's why it's very important not to copy somebody's positions. Because what if I'm out of town and you're waiting on an update on where my stop loss is, and now you lose a lot of money? Like you just have to, if you're going to copy people's positions, just basically expect that you're going to lose. And the reason why I'm doing this is to help you learn for yourself, so that you can make these decisions yourself, so that you can get this feel for yourself. So when I see this, it looks to me like a selling opportunity that I'm licking my chops at, not because I think the price is going down, because I think that the risk reward is very, very favorable. If a stop loss happens, I would feel very confident that I could get out of this position around 10,600. That's how I feel, and that's from experience. And maybe I'm wrong, maybe I'm right. I'm just telling you why I think this is such a good selling opportunity. Not because I think the price is going down, but because if it does go against me, it's going to become very clear when I want to get out of this position. If this happens right here and we form a flag at resistance with these consolidating above these moving averages, as they get a chance to make a golden cross, that is just a beautiful buy signal. So if that happens, then it would be very clear to me that I need to be out of this short, and it would be clear in a couple days. And if we just shot up from here and busted through 11,000, I would say, okay, I've got low enough leverage to handle this. I'm not afraid of, I've got my worst case scenario stop loss, so that I know worst case situation, I'd be probably something up in here. And so therefore, if this were to happen, it wouldn't scare me, and I'd just say, yep, I'm almost certainly going to be getting out of my position, but I'm going to wait for it to come back to somewhere in this area. And now maybe I'm getting out around 10,800. In both situations, very, very low risk, which will make it for a very obvious times to get out. You want your stops to be obvious, like right here for sure I want out, opposed to like, the less of an art that your stop losses is, the better, for sure, at least, and specifically while you're starting out. And for me, that's where it's very important to know for sure that, like, with confidence, I want to be out at a certain place, and then also to know with confidence right here that I'm fine holding. I'm not scared. This is to be expected. So this action right here will be very important to see how this candle closes and then what proceeds over the next couple days. Because if this doesn't happen, one of those, I would be expecting a new low, like so, something like that. And we've all seen that can happen in very short order. So if I was out of the market, I would be shorting right here. And this would be a buy stop loss, like right in here. That would be my game plan with the worst case scenario stop above it. And if I didn't get stopped out, I would be expecting, something like that, something like that, something like that, where it just really moves in my favor very quickly. So as it stands right now, I'm just very comfortable holding on to my short that is, I had taken a little bit of profit, and now that means that even if I have to cover at a little bit of a higher price, potentially I will still be around break even. This is peanuts right here. Anything that happens in here is peanuts. And it is going to be something that you just expect, is to time and time again have these little wins, little losses, break-even trades. What is so important is that if you do get into a position and it starts moving in your favor, that you're able to hold through your desired time frame. And a lot of people that follow me, I should probably do a better job of clarifying my time horizon. I know I make it very clear a lot of the times with people that are new to the channel and whatnot. The biggest way you can screw yourself up is copying somebody trades and using a different time horizon. Like, if a lot of people out there are not swing traders and do not have no business trying to swing trade, because all they're wanting is these little moves here. And a lot of people, if they are that type of person and they enter short over in here because it looks like a bear flag is breaking down or something, this action is like, it has them absolutely freaking out, panicking, hair on fire, because they are used to basically just day trading, and they can't really imagine holding through something like this. And if you're that type of person where you trade very small time frames and you're not holding on to positions for months, and you're not comfortable when a position moves against you 10% in a couple days, if you're that type of person, you should absolutely never even consider any of these signals that I talk about, because all of my signals are based on swing trading and holding through major moves. Like, I wouldn't even consider like, I just don't consider this much of a problem, because I go for big moves, and this is the type of stuff that happens time and time and time again. Somebody asked me a really bad question the other day, and I'm of the opinion that there are definitely good questions and there are definitely bad questions, and this is a good example to me. Somebody writes in saying, as the price was kind of down in here, writes in saying, are you still in your short? Or do you think that we're going to throw back and retest 10,000? And that is a bad question, because it's like, I'm still in my short, yes. And I think that there's a very decent chance we go back and retest 10,000. Like, from right here, going back to retest 10,000 wouldn't even have me thinking for a second about getting out of this position. So asking me if I think we're going to retest 10,000 or if I'm covering my short now, it's like, we can retest 10,000, we can retest even higher, and I'm still going to be short. So somebody like that, who is clearly, a position moving against them 4%, is would freak them out. Definitely, don't be trying to follow along with my trades, because this just doesn't even make me think for a second, especially when we were still under 10,000. I was really wanting to see that hold up as resistance. So let's go ahead and take a look. I was hoping to see a throwback to this trend line and resistance below. And if we use closes, a good example of why, if we use closes, this close here, close here, close here. Let's see. We would want to move that down just a touch. So we got that wick, that close, and boom, it's violated. Throws back, just a little head fake, and then breaks down. So definitely we'll be watching this. As it stands right now, could easily just be a throwback to retest a broken down trend line, which that happens all the time. Let's take a look at this guy. If on this move I'm wrong and we do continue up from here and we smash through and we retest that trend line around 11,000, that would be that's where I would think that things would need at least a breather to come back. So it's nice to see a trend line above if we do continue moving from here. Nice to see that up there. A little bit more coffee, maybe another bite of chocolate. Okay. And I'm going to go ahead and throw on the SART. That is sure awfully extended from the price, which tells me there's plenty of room for a pullback and to keep this bullish move intact. I mean, it's just amazing. The 4-hour SARs have definitely been providing some very good signals. Let's just go back. Sell 11.5. Buy, cover your short and go long at 10.2. Cover your long and go short at 10.6. get chopped in and out a little bit, and then now these last two have been working out very nicely. This is interesting and makes me want to check distance from moving averages on lower time frames. Seeing that the price has gotten this far extended from the SARs makes me wonder how far price has gotten extended from moving averages on lower time frames. And when I'm wanting to look at that, I am also wanting to look at the RSI. Okay. RSI on the 4-hour is getting to a potential point of exhaustion. Not quite. I mean, that's still got room to go before it's really up here. But do see that that has raced up very quickly into overbought territory. Definitely going to be interested in looking at some lower time frames on the RSI. Okay, now let's take a look at the ADX. This is showing a newly established bull trend that potentially has a lot of room to go. Look at that spread. That is very impressive out of the buyers. And this DI tells me that what we're seeing today isn't just some sort of, bounce before heading back down. This shows that this is a real move, and that 10,000 has just been the number. I mean, if we threw back and resisted 10,000, we would have gotten a sharp reaction to the downside. I'm confident. I mean, if we were unable to get back above 10,000, then that should have led to definitely a sharp correction. But if we can't keep it below 10,000, every time it gets below, it just gets bought up. Well, this is supply and demand, and the ADX is showing that the demand is really, this isn't showing a fake move. This is showing big buying pressure and dwindling selling pressure. Anything else on the 4-hour? So while I am still in the middle of the show, while we've got a lot of people, I wanted to mention something that I've got coming up here in a couple days that I am really excited about. I think you guys are really going to like, and that's a new regular series, a new show that I'm going to be doing as part of this channel every Wednesday. What I'm going to be doing is a live coaching show is I think what I'm going to call it. And we started at the top of the hour talking about mentors and mentorships, and that is something that I have been mentoring and coaching just from the trading perspective. My friend Gabriel, who we raised some money for at the onset of this show for his daughter with special needs, and he has really been coming along. I mean, really making some strides. I'm really impressed with how well he is starting to trade. And what we're going to do is have him basically coming on doing live trades on BitMEX, real time on low time frames, so that we can really speed up the kind of learning process and get a lot of trades in one show. And I'm going to be just looking over his shoulder, coaching him, very much like I used to do in poker. We call those sweat sessions, where if I'm watching you play and kind of giving you my input, where that's a sweat session, and that might be what I end up calling this show. So keep an eye out for Wednesdays, coaching sessions, sweat sessions, something along those lines, where it will be real-time trades, and I think it's just going to be a great way to learn. We did a practice episode on Saturday, and it just went great. I'm actually gonna, I think I'm gonna have to release the practice episode because there was so much in there that was really, really valuable. So really excited about that show. Keep that in mind. Wednesdays, it'll be around 2 o'clock Eastern time, and I think that that's going to be the single best way to learn how to trade. If you're wanting to learn how to trade, this is today, this regular show, this is kind of to teach you technical analysis. And that's where a lot of people go wrong, is not understanding the difference between technical analysis and trading. You have to learn technical analysis, then you have to learn how to trade. Learning how to trade is way different than drawing lines on charts. Way different. So that's what that show is going to be about, and I think it's going to go really well. Okay, so we are looking at some shorter term time frame just because I'm seeing signs that we're overbought, at least for today. Like just over the next 24 hours, I'm kind of wanting to look and see what is. Are we overbought? Like the kind of a plus 9% in 24 hours or so would suggest. So the one of my favorite tools for that is going to be distance from moving average. Because there is, if we're looking for limitations in terms of how far the price can move in a given time period, the best way to objectively identify that, as far as I'm concerned, is by analyzing the limitations of how far the price can get extended from the moving averages. So what do we want to look at? We want to look at, I want to say like a 30. And you can use simple or exponential. I like exponential because it's more dynamic. It keeps up a little bit quicker. Both are fine if you're just comparing. I'm really not convinced if one's much better than the other. So what we want to do is kind of just zoom out and then locate areas of resistance. And this is what we were, I was live with Tyler when this market topped at 13,800. If you want to look at that date, shoot, 1 second. Get these guys out of here. So when we were topping right here, like right when this was happening, I was live with Tyler on the Hyperwave YouTube channel. So if you go look at the June 26th show, you will see that I was using the same method where it's like, man, we are moving hard and fast, and I was long, and I'm like, man, I want to take this profit, but I also want to let this thing keep moving in my favor. So the tool that I trusted the most at that time was distance from moving average. And that's the tool that I trust the most right now. Okay, so we notice that the 4 hour is definitely getting to an area where it could roll over. Let's go back to the 15. Yeah, let's try 30 minute. Now we'll reset top one. We do see this is an important area, and then we will do this. So it's like if you expect the trend to get exhausted right here, you do very well. Let's just take a look at the signals that this indicator, this bottom red line, has provided, just in terms of looking for a short-term correction, a return to the moving average, essentially. And it would take a while to go through and label all of these, but just notice how when you get extended up to this first one, you expect a return to the moving averages before continuing to the upside, or continuing the trend, whether it be up or down. And then if it doesn't at that first red line, now you look for the second red line. And you see that right in here, it did continue. Like so here, we did return to the moving average before continuing up. So right there, that's what you look for. And notice that when it returns to the moving average, notice how this indicator comes all the way back, because now the distance from the moving average is back at baseline, right? So the distance from the moving average comes back down, and then you see the price return to the moving average. So here, where is that moving average? It's at 99.37, but it's moving up quick. So, you know, with each candle close, it's going to continue moving up and up and up. And one thing that may be confusing is that I have the 30 in here and the 50 on the chart. So that's something we can fix just there to make it a little... I like analyzing multiple. There's good reasons to look at shorter moving averages, and there's good reasons to look at longer ones. So I kind of like looking at both. Here we have the 50, and we see that this top line is still, clearly very important. And then we can just kind of move the bottom one up and see that this range here, I wish I could do like a paint bucket. Let's do this. So that range there, that is what I would say is my overbought range. I need to make it red, or else it's going to make me feel anxious, because I'm just a weird dude like that. All right, so there, just by looking back through this history, is where the price really struggles to get above this overbought. Just because you're overbought doesn't mean it can't get more overbought, but just notice how rare it is to get more overbought above these two lines compared to how common it is to reverse very, like right here is perfect, very, very close, basically perfect, very, very close, perfect. And so right now we're in this territory of absolutely. So if I'm short and I am thinking about, do I need to be getting out of my position, I don't want to be buying when we are this far away from the moving average. Okay? And like I said, just because we're overbought doesn't mean we can't get more overbought, but if that does happen, then the more that we do get above, extend from the moving average, the more I expect there to be a following correction. So as long as I'm not over leveraged and I'm being very diligent about managing the stop losses, it doesn't matter if it keeps moving against me, because I should be able to get out on that following correction. And, that's something where I do protect myself with a worst case stop loss. So seeing it roll over in this territory is what's very important. Is maybe it's not even going to return to this area up here. And just notice that if it rolls over, how that is basically kind of the signal. If you're in this territory, you don't necessarily wait for it to get up here. What's more important is waiting for it to roll over. And that is what we're seeing right now. And that tells me that I wonder what's going on with the price. Nothing yet. Interesting. We do have some reversal candles on the 30-minute. And what do we got? 2 hours until the 4-hour and daily close. These next 2 hours are just so important. So important. If we return to these moving averages in the next 2 hours, that potentially puts us back below 10,000, and that would give us that huge shooting star on the 4-hour, which would get a close back below the 200 EMA. If in the next 2 hours we return down here, I think a lot of people would be ready to buy, but I think it would just fall right through. And the distance from the moving average is saying that we probably should be returning there very soon. Let's see if the ADX agrees. Kind of the same practice, right, with the ADX that we do with the distance from MA. Let's just go ahead and get those buggers out. Blow it up. Diagonal line. Horizontal line. Diagonal, really? Boom. And boom. So 30-minute ADX is absolutely at a point of exhaustion, in the same sort of sell zone. one time we've gotten above this top line so far, and many times have we reversed in this zone right here. Whether it be you barely get up and roll over above this red line like this, or you come all the way up and perfectly hit this top zone. So twice. I mean, look how hard it is for this ADX on the 30-minute to get above 80. Very important. So when it does, then there's one more. So there's still, the ADX is showing the same thing where we're in this overbought zone, but still it could get even more overbought. And if it does, this would be the top zone. And I want to make that a different color, something like that, just to let me know that if we do manage to break through this top one, then that makes it even more likely to correct very soon, just like we saw on the distance from the moving average. It can go up from here, but if it does, that just makes me more confident in the correction, a sharp correction, that maybe only gets it back down to 10,200. Maybe that's all that happens. Absolutely, we could go sideways while returning to the moving average, or while the ADX gets a chance to cool off. That could happen while we go sideways. And if that happens, the moving averages on the 4-hour are going to start to get closer and posture for a golden cross. So there's definitely multiple ways for this market to correct. And it doesn't necessarily mean we even have to go a penny down from here. But what I think is most likely is that we get at least a push back down to below 10,300. And if that happens, I think that we would go back down to below 10,000 very soon due to those moving averages on the 4-hour chart. Okay, so ADX and the distance from moving average are in agreement that this is a point of potential exhaustion, and to pay very close attention. This I would consider a shooting star inside bar, and now watch for the low of this to get taken out. If 10,365 gets taken out on this candle, then that would tell me it's time for this thing to return to the moving average. And if that happens here in the next 2 hours, I'm going to be feeling pretty confident in a bearish reversal candle that gets us back below the 200 EMA. And if that happens, like I said, that would be like the perfect selling opportunity, just for me. You guys, you trade for yourself. Okay, so we're watching 10,365 as confirmation of these reversal candles. Let's see what the hourly looks like. Strong. Definitely not a reversal candle there. Getting ready to have a cross here with the price extended. Again, this is what you hear us talk about, Tone and I specifically, and that's a golden cross when the price is extended. That's not a buy signal. And if it's not a buy signal, what does that mean? It means that you are not expecting it to go up from here, right? You're expecting that the market's overbought and that it needs to correct. That's, just an extension of saying that this isn't a buy signal, means that it's a time where you would expect a correction to occur. So now that the ADX and distance from moving averages are saying we're at a point of exhaustion, I want to check for the TD sequential, see what it says. Okay. 1 hour is fine. But what's more important to me than the 1 hour green 4 or 5 that we're on that says that we could have more hours to the upside, what's more important to me is how extended we are from the moving averages by a long shot. And this looks strong, only on a 7 on the 4 hour. So if we can get this to a 9, like I said, the longer we stay up here above 10,275, the more likely it is that we are able to reverse these moving averages and really continue in a big way to the upside. So if we just get 2 more candles that get us to a 9, then I would be probably saying that the most likely is a 1 to 4 candle correction pull back into a golden cross. And I might have drinking too much coffee and eaten too much chocolate, because now I'm getting a bit of a bellyache, but what are you going to do? I deserve it for all of the bad decisions I made yesterday. What are you going to do? Okay, this 30-minute is very interesting, and I love the 30-minute. I don't like the hourly. It's just an awkward one. I like the 30-minute. And we are on a 9 with a reversal candle and some 13s. So, like I said, watch out for breaking down 10,373. That would be the confirmation of these reversal candles following a 9 on in exhausted territory based on the average directional index and distance from moving average. Okay. And something else I look for is 3 consecutive 9s. That is what I expect to see time and time again when the ADX tells me it's exhausted, and we've had back-to-back counts in the same direction. It's just so common that it's 3. It's specifically 3. And here, this I count. You know, we got to an 8, made a big move. I count that. So 1, 2, 3. That's what I want to see. If I'm looking for an exhausted move and it's only the second 9, I'd be like, oh, shoot, you know, I'm just so used to seeing 3 9s. And it's weird how the third 9 is so common for it to happen when ADX gets exhausted. So look, we've got the distance from the moving average turned over at this horizontal on the 15-minute. You know, something I would even do there is draw a little trend line and see if it finds support there. Then I would expect another move. If it doesn't, I wouldn't. So yeah, I just love seeing 3 9s and an exhausted ADX. Let's just go ahead and do weekly chart. What do we get? That's what I was looking for on the weekly. 1, 2, and then a third 9 count is what I was looking for. Gave up on that when we got this reversal candle. That shooting star was not to be trifled with. So what I was really wanting to see, though, was see how the second 9 comes when the ADX is still strong. And then the first 9 even more so. So these 9s just don't scare me because this ADX is telling you we've got plenty of room to the upside. So what I was wanting was a third 9 with this action here. Didn't happen. So back to the 15-minute. What I was curious about is, do I count this? Because you see we got 1, 2, 3, 4, 5, 6, 7, 8. And then it's like 1, 2, 3, 4, 5. Like, it's almost like we got 2 before this 1, 2, 3. And I don't count these because look at how the price went nowhere. You start here on this 1 at 97.71. When you get to the 8, you're at 97.95. That's just like the price went nowhere. To me, yeah, sure. It's damn near got to a 9 just like this one did right here. And even has an arrow. It was 9 for a second. So yeah, you can say that that almost got to a 9. But for me, it went nowhere. It was still stuck in this range. And what I was looking for is a break of this range. You know, we're stuck in this range. And a break leading to trends. So 1, 2, 3 with this exhausted ADX. Potentially what I'm very used to seeing right here is a head fake on the TD sequential. So like right here, we're at an area where I feel confident we're exhausted and should correct, whether that be sideways consolidation or full on, you know, move back down to the downside. What I see here happening all the time is that you get a little head fake that gives you the 2 above the 1, where this candle gets above the 1 and gives you the head fake for buyers, and it's gives the buy signal for 2 above a 1 so that people buy. And then it also wipes out shorters who say, I'm selling this 9 and putting my stop loss above, you know, either this candle or this candle. So that's would be ideal over the next like 30 minutes. not even, over the next 9 minutes, we start basically, boom, get up here, whether it closes or not, and then immediately just like roll over and just immediately fall apart after this buy signal comes in, which wipes out the shorts, and then the price immediately rolls over. That would be beautiful. Something else that I just kind of would watch for is if that doesn't happen is a Bill Williams fractal forming. We've got one here on this 5. Let's just get that guy out of here. So Bill Williams fractal here, and now we could have one forming here where you get up to the high, you stay inside the wick of the shooting star, and then form another fractal where it's low, low, high, low, low. That's something else I'll watch for. So when the ADX and the distance from the moving average tells me we're at a point of exhaustion, that tells me I need to sit in the edge of my seat and pay very close attention to very precise price points and boundary lines, because that's when the price is at a point of exhaustion, you don't know if it's going to just keep going or not, and that's where I will come in and use other tools, like looking for a Bill Williams fractal that is inside the wick of a shooting star. To me, that paints a picture of, okay, now we're at a point of exhaustion, and we have signals saying that we're reversing right here, right now. That's much different than just saying we're at a point of exhaustion. So when we're at a point of exhaustion, that's when I want to really zoom in and look really closely and use some different tools like the TD sequential, which is on a 9 on the 15 and the 30 minute, and then reversal candles and Williams fractals and parabolic SARs. I guess TradingView is going to be fixing their SAR. They sent me a direct message on Twitter asking me to look over their code to confirm that their new SAR is up to snuff. The last time they sent me that, I spent some time looking into it, and it definitely wasn't. So I just told them that, you're clearly wrong. Like, I laid it all out, and one page it used a source the original stuff. Like, here's the formula. Very simple. I mean, it's something that literally a 7th grader could understand. And then they tried again. I'm not trying to, disparage them too bad, but it was like when they tried again and still had it wrong, it's like, well, what are you doing then? So they just sent me another message today to ask me to look again. And I didn't have the time, but hopefully I'll be able to confirm that for them here soon. I just told them to overlay it my SAR, and if it's good, then it's good, or to give me the formula that they're using. So it is interesting that they will be fixing that. So SARs high and tight, just beautiful. So I was looking at this price right here as confirmation of reversal candles, and what do you know? The parabolic SAR completely agrees. Love it. And SARs that are high and tight, that is another sign that this is exhausted. So this is basically why I love the SARs so much, is that not only does it show us that the trend is exhausted by getting very close to the price, but it also gives us that confirmation of not only is it in an area of being exhausted, but it's ready to correct once this SAR breaks. As long as these SARs are intact, it could absolutely continue to the upside, and anything could happen. It could break it down and then continue, obviously. But as long as these SARs are intact, we're at a point of exhaustion without confirmation that it's ready to correct. And then once that breaks, that's confirmation that it is ready to correct, and that's at the same area that these reversal candles get confirmed. So I love seeing that. Okay, let's just look at the 30-minute. Wow, that's been bullish for a long time. The longer the string of SARs, the more likely it is to be exhausted. And I've studied the limits for how many consecutive SARs tend to happen. Like if we get 50 consecutive SARs, it's important for me to know how often we are able to get more than 50 consecutive SARs. Like when I track the price action in terms of if we're up 10% in 24 hours, I know that sometimes we can get to plus 15% in 24 hours, but I know that that is very rare compared to how often we will get to that 10% threshold and then cool off for a little bit. Same thing goes for SARs and how long they can stay in the same direction. I know that around 31, 28 to 31 is the most probable area that SARs get reversed when they've had a prolonged trend through backtesting, and therefore if you get more than 31 consecutive SARs, now it's like really, oh wow, we need to be paying very close attention for that to break, because of how rare it is to get more than that, in relation to how common it is to reverse from that territory. So just really loving the reversal candles that we're seeing off of this trend line. Remember, we said that this could just be a throwback to retest that prior trend for resistance. Did I have an alert on the distance from the moving average? I think I did that by accident. Distance from moving average crossing. Maybe I set an alert. I don't think I meant to. So it looks like we're ready, or getting very close. We could still, we haven't gotten here. I would move this up a little bit. This confirmation is basically on this candle now. Now that we have another reversal candle, I would use the confirmation of this reversal candle opposed to the one before, say. So what is the low of this is 10,387, and the low of this is 10,387. So it's 10 up, and there it goes, 10,386.5. We just took that out by 50 cents. That's all it needs. Confirmation is confirmation. So we've got a reversal candle confirmed. I think the distance from the moving average had already moved over, started rolling over. So that was our kind of sign that we need to be paying very close attention. We see the ADX is at the top boundary. I should have left that distance from moving average on. So this is great that we're getting to do this show while action is, the price action is so, what's the word I'm looking for? What is the word? Fickle. Yes. I think that's the word I'm looking for. Very fickle with what can happen. They can turn bullish or bearish very quickly, and I'm glad that we're able to analyze some charts while in that environment. And so let's see what we got. We had the rollover at resistance or above. That was our sign. That was my most important sign. So we see that it's at a point of exhaustion when it gets here, and it's ready to correct when it rolls over in this territory. So that was my most important sign. That's why we started with it. And it rolled over right here. We'll say right here on this candle right here. And then we can just kind of look for, that final confirmation. And that happened right as the reversal candle was getting confirmed. We broke down the trend line that I said I would look at for that kind of final confirmation. So you see why I use the tools that I use is they come together very nicely. Like I really like tools that complement each other and give signs at similar times, so that I know that when it happens that everything's lining up, I'm seeing good confirmation, I can be confident, and yada, yada, yada. Whereas when there's other times and it's like I got one good signal from one great tool and then the other one isn't lining up, so it's like, maybe I should just be a little less confident, maybe position a little smaller, maybe stay away until that final confirmation comes. But what's really important is that you don't get analysis by paralysis, that you're using these different tools that very rarely flash signals at the same time, where it's like always you're getting a buy signal and then the other signal is always, kind of is rarely coming in at the same time. It's very important that that isn't how you do it. Try to find tools that work well together, and that's why we That's why I just love Wells Wilder indicators. Wells Wilder developed the parabolic SAR, he developed the average directional index, and he developed the RSI. And he developed them for very, very specific reasons. And he developed them to complement each other. So as a starting point, just starting with the tools that one person developed, that's a really, really good way to go about it. And as I have really grown to love the parabolic SAR and the average directional index, it's caused me to actually use the RSI more, because now I'm really realizing that why he might have been using these tools to complement each other. And here's my favorite resource, and what I went to find the correct calculation for the parabolic SAR. And this was the text that Tyler Jenks, this is not this specifically, but when Tyler learned the parabolic SAR and the RSI and the average directional index, he learned it from this exact text from Wells Wilder himself. So not only are they my favorite, but I have been so fortunate to kind of learn some of these on a second-hand basis, which has been, I'm always thinking about how am I going to get an edge, and that's where I originally wanted to get very interested in indicators that I could learn as close to the source as I could. That's why I like Consensio, or really worked very, very hard on implementing Consensio into my process, is because I was able to learn it, from the man himself. So if anybody is wanting to a copy of this, it's for free. I have put it out there. If you go, let's just go ahead and see. And it was the chat that actually sent that in when we were trying to figure it all out. So that was really cool. Let me show you guys how you can get that text very easily right now, so you don't have to send me a bunch of messages. Just go to LucidSAR. Maybe I can also include a link in the description. I need to get better doing that. So search LucidSAR, and instead of clicking LucidSAR, click Casey Bowman. He is the one who put it together. So you click that, and then you come over to scripts. You see ideas, and then scripts, and then you come to LucidSAR. Okay, you see it's got 1,500 thumbs up. That's really cool. A lot of people liking what we're doing. So you come here, and it says, here's where we got it from, right here, from Wells Wilder's book himself. And if you click on that, boom. New Concepts in Technical Trading, J. Wells Wilder Jr. I never knew his first. It was J. Wells Wilder J. I never knew that. And then look for basically the table of contents. The parabolic system, that's it. Parabolic SAR, first time it was ever released to the public, was right here in this text. He's got volatility index, volatility system, directional movement concept, average directional index right there. Relative strength index. This is as cool as it gets for me. I really am a geek for this type of stuff. I mean, I really like that. Okay, moving along, let's just get back to these charts because it looks like we confirmed. We kind of bounced back up a little bit, and now we're coming back down. So we're wanting to see the 30-minute, ideally closing below this low, 10,387. So that's what we want to see, is ideally we get that close. And let's see if maybe it happened on the 15-minute. It didn't. You notice how we managed to stay above, but we did break that SAR. Okay, so to me, that's when we're looking at, okay, is this, looking to this for confirmation of, did this close below our boundary? This candle here, I was wondering, did this candle close below this low? That's what I was wondering, and it didn't, but this SAR broke, which is like basically as important. It would be better if we closed below here in terms of the probability of continuing to the downside, but a parabolic SAR break is like that important to me, where it's like right there. So seeing that we didn't close that candle below, but we did break the SAR, tells me that I am confident that we will close below here eventually. But if it's not on this candle, then soon. We did get that fractal that we were looking at. And let's just go ahead and prove it to ourselves. Yep. And that printed when this closed. And it's a lower high below here. And I talked about last episode, or maybe two, of the entry of re-exploring a wick, something that I like. You get a shooting star, and you sell when the price re-explores this wick, and you put your stop loss above the top of that wick. Inverse for a hammer, like if you've got this down here and it's flipped around with a bullish wick, then you buy as price comes and retests with stop loss below. So that's something that I'm always thinking about, kind of in the back of my head, looking at when we see this candle here. It's extremely important to me that it stays below here, and then seeing this fractal print inside with the lower high, that definitely paints a pretty good picture, kind of like I was talking about. Looks like that here, now we're getting ready to correct, which is a lot different than being overbought, is being ready to correct, or at least having confirmation from your indicators that we are. So I am going to just kind of keep this thing going as long as we are flirting with this area here, because like I said, there's just so much that can happen over this next time, and if you want to tune out, then that's quite all right. But for me, this is just very, very important action, and this is all that I'm thinking about right now is this 10,265. It looks like we're ready to correct, right? And if we do that off of a throwback to this trend line, and we do it in such a way that we're able to close this current candle below the 200 EMA on the 4-hour, that would be just perfect for my position. I would just be feeling really, really good about how I'm sitting. If instead we just kind of go sideways and really, don't get much of a correction at all, even though all my indicators are saying it's time to, then I'm going to start to get worried. And we should really, in the next 30 minutes, like here very soon, we should be seeing, like right now, what if we just take out this SAR and take out this high, which I was telling you, super important to me if we take out this high. If that happens right here, right now, it's almost like I'm going to put my hands up in the air and would not be expecting a correction anymore. So we want to be watching these charts very close. Like I said, just going to kind of keep this going. I think that, I can just keep my eye on the chat for some questions. I appreciate you, K4 Liberty, for not going anywhere. That is good that I'm not hanging out with myself. I like the tie idea. I appreciate that. That's kind of the brand. The hoodie is only part of the brand, and I get lazy and I don't wear the tie sometimes, but I want to do a little better, especially now I'm starting YouTube, is, the hoodie comes from my poker background. I always wore a hoodie when I was at the casino grinding out. It's cold in the casinos, and I like hoodies anyways. I would just wear hoodies all the time. So that's part of it. The other part is the shirt, the tie and the dress shirt and the slacks and the dress shoes, because I was a financial advisor after getting into poker, and I was going around in my tie and giving my spiel for why you need to set money aside in a retirement account, specifically in a 403b. I worked for one of the largest 403b providers in America, and would wear every day a tie to work. So when I got into this, I loved the idea of combining the two and being, wearing my hood and a tie. So that's hopefully we'll see more of that moving forward. And Business of Vintage, thank you for clarifying some questions yourself. It looks like somebody had a question about fractal, Bill Williams fractal. That is correct. And another thing that I'm really interested, and I'm going to give you guys another good resource here real quick while we're at it, because for me, providing valuable resources is literally one of the best things I can do. Is if I can send you to a good video or whatever. So go to YouTube and search Practical Fractal. Okay, and this is, look at that, 300,000 views. Have you seen, like, what gets that kind of views in on YouTube for trading? I mean, that is crazy. And I'll tell you what, it deserves every single one of them. This should be I think this was a seminar where he probably charged like 10 grand to go, learn the fractal, like Tyler taught hyperwave and Consensio and that sort of stuff. This is a videotaping of him with their students in the class, and I'm sure they're paying more than $5,000. The going rate for learning technical tools, I've never seen anybody teach them for under 5 grand except for in crypto. Generally, like Tone Vase, he paid $8,000 to learn the TD sequential, and now he only charges 0.1 Bitcoin, which is just it's crazy how cheap things are in crypto and how people still bitch and moan about anybody that wants to charge for anything. So anyways, this is something that is free and that should not be. I'm surprised that it's out there for free. It's 118 minutes, but it is awesome. There's a lot of like kind of philosophy and spiritual stuff, which I am really into, and it goes, it's a simple thing, the Practical Fractal, but this is his seminar and he goes into actually trading it and stuff like that. And I really like Bill Williams and I want to learn more from him because I think he looks at the markets very similar to me, or I guess a better way to say is I look at it similar to him. I love the fractals that he has. Absolutely, that's one of my favorite indicators, and he came up with that, and it's something that it just works, and it continues to work. No matter how many people know about it or learn about it, it continues to work. And then he is also known for his alligator. If you search on TradingView, Bill Williams, they have just screwed everything up. It used to just be like 3 options. This is crazy. So generally, I'm used to just seeing like Bill Williams Fractal, Bill Williams Alligator, and then maybe a couple others where it's not all these, different tweaks and iterations that people put together that are now showing up higher on the list. It's just very frustrating. So yeah, just Bill Williams Fractal. And then there's also the Bill Williams Alligator. Did I spell Bill Williams wrong? Was that what was wrong? Bill Williams, no. Yeah, alligator fractal, and it's like, I guess it's all in one, but that's not what I want. So yeah, you guys know that I like Consensio. Consensio is 3 moving averages, and so that's what basically Bill Williams independently came up with a 3 moving average system called Bill Williams Alligator. It's like the jaws, the lips, and the teeth are the names of the different moving averages, and it's very, very, very similar to Consensio, and that's where I need to learn more, is to see where are the actual differences. Since learning Consensio, I haven't gone back to revisit the Alligator, and I need to, because I think they're very, very similar, and that's what he does, is use 3 moving averages and fractals, and does it very, very, very well. And his students, at the top of this presentation here, he goes over trades of former students. It's like, yeah, you're probably paying a lot to see this, but look at this guy who just made 500 grand trading the fractals, and then look at this guy who just made a ton of money. So the systems he employs works not just for him, but also for the people he's teaching. Oh boy, this is some interesting action. Very, very interesting action. And I said that this wick here is super important to me, specifically with this SAR lining up with it. So very, very, very important that we stay below this to me. And if we do get above, that it just wicks above and doesn't close above. And I could take that a step further, since now we have a new Williams fractal that printed, and draw a horizontal using the top of that candle. Okay. Oh, I accidentally added an extra SAR. That's what happened. Okay. So we see that we've got the up fractal. We were kind of watching for that. Even before this printed, we were watching to see that it looked like it was coming in. It's that nice rounding pattern, that this is the fractal that I'm used to seeing. This is the real nice one where it's like a rounding. This is kind of a weird one, but still definitely counts. So we saw that in real time, and then that's, as this was happening right here, we failed to break down. We did confirm the reversal candles, because for me, you just need to break down below even just for a second. It doesn't have to close, and 50 cents below is enough. So here the low was 10,387. Here the low was 10,386.5. So literally that's how precise you have to be sometimes. Is okay, that did confirm. If you trade below this candle at any time, then that does confirm it. So we were watching that in real time, and as soon as I saw that price trading 50 cents below this candle, I said, okay, it's confirmed. We don't have to wait for a close. So now we saw it confirm and immediately reverse, and it's like, oh boy, when I pulled it back up, it's like, hey, this is very interesting, and that's where I want to see it stop below if it's just some sort of head fake, stutter step before that correction comes. Because once this candle happened right here, I said, okay, now we're ready to correct. We've got reversal candles, we've got broken SARs, we've got the distance from the moving average had rolled over, and it had also broken down its trend line. Everything was there as of this candle trading at 10,386.5. And then what happens? We immediately reverse. And that's actually a really, really good example of something to bring up here. Is that before going camping yesterday, I did make a post on TradingView, which was basically the worst time it could have happened, which is kind of like what we're seeing right here, right? I got my confirmation, I made the call, and then boom, immediately goes against me. But it's not a problem, because we're still respecting the boundaries that I really, really want to respect. So as of right now, this is not a problem, this candle right here. And that is basically exactly what we saw with my analysis here. I wonder why I can't push the play button. Maybe I need to blow it up, or at least click on it. Okay. All right. So I made this post right before leaving, and unfortunately I wasn't able to wait for my confirmation. I wanted to wait for this thing. Actually, no, I'm wrong. That we did get a close below my bear flag boundary, so I did view this as a confirmed bear flag, and I made this post right before going camping, and basically as soon as I posted, what did happen? Bam, right? I mean, as soon as I posted, I post short, and then boom, right in my face. A lot of people, think it makes me look like an idiot, but it really doesn't, because just like here, where this isn't a problem as long as we're below my important boundaries, just like this guy isn't a problem, for me, this hasn't been a problem either, because I'm not in danger of getting liquidated. I'm very comfortable with how spread out the moving averages are. And as we saw right here, I've got very specific areas where this thing does become a problem. I'm not just being wishful and hopeful and saying that it's not a problem when it really is, because there are people that do that. But here, I'm saying that, let's see, it was a 15-minute. I'm saying that, boom, we're ready to go down. It goes against me instantly, and then I say it's not a problem, but it does become a problem right here. If we break that, okay, I'm gonna hold my breath, and I'm gonna say this is kind of a problem, but we've got one last area that could hold, and that would be the top of this and this SAR. So if those break now, I would say, okay, that this was a fake breakdown of this candle, a fake confirmation of the reversal candles. If we can break through this high, now it's a problem for this. So this is kind of a microcosm of what we're seeing here, in that I also have very specific areas where this does become a problem. If we get back above this trend line here, that's a problem. If we spend a day or two going sideways, that's a problem. for my short, and it's not really a problem. I'd actually be kind of excited to go ahead and exit that short and look back to the long side. But for my short position, it would be a problem if we consolidated sideways from here. It would be a problem if we broke through 10,500. Absolutely. We've got that there. So basically, you can have a market. There's a couple things to understand, is that when the market immediately moves against you, you have to be very, very clear about when it is a problem and when it isn't a problem. When do you need to be getting out of this stop, out of this short by buying back in, and when do you not want to be buying resistance? This is why I say stop losses are an art. I mean, this to me is an art right here of saying that it's not a problem right now, but it can become a problem in very, very short order. That's how I like to handle my stops, and I think it's very, very important to be very clear about those things, because if you're not clear about, understanding that a position can move against you 10% in 24 hours and it not be a problem, if you can't handle that, then you can't swing trade. I mean, swing trading is holding on to positions for months, and if you think you're going to hold on to a position for months and it's not going to move against you 10% in 24 hours, you're crazy. So if this is a problem for you, then maybe just look at trading shorter time frames or not trading at all, or whatever the case may be. If you're trying to swing trade and you're trying to capture big moves, 100% plus moves, which I absolutely think the best way to trade Bitcoin is swing trading or position trading, depending on how you define that, where you're getting in for major, major moves and getting out before major, major corrections. That's how I want to go about it. And therefore, I have to be able to handle a position moving against me, even 15% in 24 hours and maybe 20% in a week, depending on how it happens and all that sort of thing. And that's why I was covering a little bit down here, because I knew for sure that this was like, from here, it's like 50-50. You're going to go up or down. I mean, I thought that I was maybe giving it 70% to the downside or something like that. But the reality is you're going up or you're going down. And we moved. Now we're down here. So I know no matter how much I think this is going to keep moving in my favor, I just know that, the market can do this. And therefore, I was covering. I was buying at support, right? That's what we want to do is buy at support and not buying at resistance. So this is a really good example of why you partial profit take. If I would have taken more profit, like 20%, 30% or more, then I would really be in a good position to go ahead and re-enter that 20% or so, if we had an ideal kind of setup up in here. Since I was confident we were going to break down, I limited how much I took out from the market, only 10%, but I didn't take none out. And if I took none out, now I'm really, maybe not feeling as good. I'm not feeling as confident about letting this thing, move against me or letting it ride. So let's zoom back in. I think we should about have, we did have that 30-minute close, and it closed way up here. Amazing. I was wanting it to close below here. Definitely didn't happen. But love that it has found resistance right where I would want it to. Okay, so we'll be, I guess, maybe give this about 20 more minutes or so and keep my eye on the chat, see if there's any good questions. I'm pretty into the 4-hour right now. It's just so beautiful. U.S. laws does not allow for big margin, absolutely, and that is important. Like that's consumer protection. There's the reason why U.S. doesn't allow for big margin is because like 99.9% of people that use big margin or big leverage get it handed to them. And that's something that is actually very important to clarify. Often when somebody hears that you're trading on leverage, they just assume that you're trading on big leverage. And the reality is there's all the difference in the world from 2x leverage to 10x leverage. 2x leverage just should basically never be in danger of getting liquidated before you want to get out of the position, provided that there's not some sort of freak situation. But in Bitcoin, imagine that you're shorting or you're longing and you're using 2x leverage. That position can move against you 50% without you getting liquidated, and therefore, like I'm talking about here, a 10% move not being a problem, but a 50% move against me, that's an enormous problem. I got to be out of my position way before it moves against me 50%, right? So therefore, using 2x leverage just makes a whole heck of a lot of sense, at least to me. And like the average leverage on BitMEX is somewhere around 7x. Yeah, they offer up to 100, but the people that are trading a lot and trading consistently, like the average, if you add it all up, the average is about 7x, I believe. And that is definitely on the higher end of what I'm comfortable with, but it's still very, very reasonable if you think, if, say, for example, you are a person who never lets a position move against you 10%. If a position moves against you 10%, you are always getting out, then you could use 7x leverage and never get liquidated because you're always getting out when it moves against you 10%, and 7x leverage would not have a liquidation price inside of a 10% move. So I am almost finished with the BitMEX tutorial. I've got 101, 102, 103, 104. It's come together really good. I've just got one more episode to put together. My goal is to have that out tomorrow, because on Wednesday, Gabriel and I will be going live with live trading, which if you are not very used to trading, we're going to be moving fast. I mean, we're going to be buying and selling and using different kind of orders, and stop limit orders and stop market orders, and doing it without talking about it and explaining it. It's going to be we're going to be assuming that people have watched the tutorial and have a basic understanding of how to use the platform, how to adjust the leverage, why we're using cross leverage, which can actually mean that we're trading on 100x leverage, but we're doing it in such a way that it's very, very controlled and we're not in danger of getting liquidated. So the difference between cross leverage and isolated leverage is part of, I think, 104, maybe it's 103, but that's something that I have a good amount of experience with and I've thought a lot about, and I've got some of my own input in terms of why I use cross leverage. I explain that in the tutorials, and I also talk about how I calculate my leverage amount, and it's based around what I just went over. It's like if my stop loss is a certain percentage away, well, that tells me what leverage I can use, and it's a very simple formula to calculate leverage. Just using the easiest example ever, let's say there's no fees, and you've got a stop loss that's 10% away from the price. The max leverage you could use is 10x. Just based on the math, because if you're at 10x leverage, that means you've got 10% of the position in margin to cover, and if there's no fees provided, then you can, use 10x leverage with a 10% stop loss, essentially, where if that moves against you 10%, now you're either going to get, have to add your margin or get liquidated, but you're wanting to get out anyways, so that's where you calculate your max, and then if there are fees, like there are on BitMEX, you always, account for that. So very excited about that series. I hope I will be able to get that out tomorrow so that you guys will be have something to refer to, because I'm sure even if you do have experience trading on BitMEX, there's a couple unique little things that we do that will be different, that we won't have the time to explain really in real time, that will be explained in those videos. And really appreciate the compliments. Rico Liberty Report says doing great. I appreciate that. This is good news. Thanks, Sawcruhteez. All right. Okay, what is your take on BTC one chart? Let's go all night. I don't really have a problem like with the daily close coming up at 6. Like that's. I'm a big part of me wants to stay out here until 6, and people are sticking with me. I might, I don't know. I might have a hard time getting off. There is a Tyler Jenks vid on Consensio. Look through his videos history. Yep, and to give you guys another resource, if you come here, any of the tools that I use You can find some resources about them, and I do need to update it, but you can find resources about them by coming to the TradingView, going to any post. Right now we had the most recent pulled up, but let's just say, any post that you go to, at the top is Sawcruhteez Strategies. Put together advanced dollar cost averaging methods, how to buy the dip. But right now what we want to look for is comprehensive trading process. If you click on that, it brings you here and shows that basically a list of my favorite tools in order, and that's why I do need to change it, because this order has changed. Like for example, the average directional index is above the TD sequential after a good amount of time tracking. The Ichimoku cloud is above the TD as well. So adjustments need to be made, and that's kind of the bummer about TradingView, is it doesn't let you make any edits after 15 minutes because it doesn't want you to edit, bad analysis. So that makes perfect sense. But when I need to edit something, I have to put together a whole new article, and that can be a bummer. So what I'm showing you here is, it sounded like in the chat somebody was interested in learning more about Consensio. If you're interested in learning more about any of the things I talk about, come to my TradingView, go to any post at the top, click on comprehensive trading process, and then you will find a hierarchy of my favorite tools and a link to where I learned them from. You click on Consensio and it brings you here, which of course it won't load.
Hi, this is Hyperwave.
And there it is, deep dive into Consensio with Tyler and Leah. Okay, and what else was I going to mention there? Oh, one other thing that I just meant to mention that I haven't done a good job of clarifying. So each of these does point to, like where I learned it from. Like for example, the Ichimoku cloud brings you to,
as usual, all information.
Carpe Noctum's YouTube. Josh Olschwich brings you to his YouTube. One thing I want to clarify is that he uses what he calls crypto settings or double settings for the cloud. Even though I learned the cloud from him, I tried the double settings for a long time, and I don't like the double settings. I really, really like the traditional settings for the cloud. So that's another thing where I should clarify that if I'm sending you, let's see, I did clarify, good. Starting to use traditional settings across the board, great, okay. All right, now back to the charts here. Is what we are wanting to see is that we got this little head fake. So confirmation of this candle. Head fake resists right where I wanted it to. Now we want to see it roll over and give us another Williams fractal. And I wonder if it would be lower than this or not. So let's take a look. High of this candle, 10,472. High of this, 10,475. Excellent. So if this candle stays below this peak, then we get another Williams fractal, which would be another lower high. That's just what I would want to see after getting a little head fake, which I said wasn't a problem as long as it's below here. And when something gives you a head fake and it gets close to becoming a problem, like we saw on this micro scale and also on the macro scale, when it's close to becoming a problem, that means that the reaction should be sharp. If it doesn't go ahead and become a problem, we want to see a sharp reaction. Oh, 1 second, nice. So we want to see, a sharp reaction when it threatens, when it really gets close to threatening and doesn't do it. A good example would be the most recent action right here, where it's like you get really close to this bullish cross, this golden cross, where this isn't a problem right now really, but it's getting very, very, very close. And if these cross, then absolutely we're out, and it's very, very close. But when it gets close and there's no cigar, you want boom, you want sharp reaction. Okay, so that's what I would want to see here, is if this really is going to not be a problem for my short position, I'm wanting to see a sharp reaction. And on a smaller time frame, that's kind of what I'm wanting to see just in these next couple candles, is like a sharp reaction down in there. Okay. What time Wednesday? Shooting for 2 o'clock Eastern Standard Time for our show. It might be an hour later. Okay. Let's see here. Just checking the chat. Somebody says hi to Leah, and I am definitely wanting to get her on the other. There's a couple other things that I'm working on, and one will be having regular guests. I really like the idea of doing like 1 day a week where I try to get regular guests and potentially guests who people aren't familiar with, but definitely also with some people that everybody knows. And the first guest I wanted to have was Leah, and she still might be. I asked her, I think last week, and she's out of town, so it just wasn't a good time for her. So I guess Gabriel may technically be my first guest, but that's a totally separate segment. So I'm thinking like Thursdays, something along those lines, a show where I do a guest, and I'm hoping to be able to get Leah on as the very first guest, just because we've had such a good relationship and been so close, me and her and Tyler. I think it'd be just a great way to kick off regular interviews, would be having her on. So hopefully we'll be able to get her on the show. I know everybody really misses her. That was something I definitely heard quite a bit of when I started joining Tyler, was maybe we didn't do the best job of clarifying. Everybody just was always wanting to know, where's Leah, and who the hell is this guy in his hood, and get Leah back, and yada yada. It was really neat from the one hand that to see how much people really cared for Leah. So hopefully we'll be having her on the channel here soon. I'm hoping that we're getting this sharp reaction I was just talking about. And we've got about 8 minutes before this 15-minute candle closes, and I'm wanting a close below this red line. If we can do that, then it should really, give us a pretty sharp reaction. Yeah. And it looks like maybe there's a trend line that we could start to draw in along this line here. Yeah. You got 1, 2, 3, 4, 5 touch points, which if we stayed in that, maybe it was going to develop like an ascending triangle, bull flag type of situation. Now it looks like that trend line is in danger. Do need to see closes below trend lines, not just wicks, so we'll have to wait to see what happens there. And I've got some other notes written down. Let's see. Something else exciting is we are approaching 3,000 subscribers. I am really excited about that. I was stoked to see it over 25, and in very short order, it's, I think, over 2750. So really appreciate you all who have taken this time to subscribe. And if there's anyone else out there, don't hesitate to click that subscribe button and ring the bell and tell friends and family if you like it. If you don't, that's fine. Leave comments either way. Feel free to thumbs down. Just appreciate anybody who is taking time out of their day to watch me yammer on about technical analysis, because I absolutely love technical analysis, and I absolutely love analyzing charts in real time. And I absolutely love doing that when markets are volatile and ready for a move or following a move. So that is definitely what we're looking at now. And come on, buddy, just come on, give me that reaction that we're waiting for. Take out these lows and stay there. If that happens, it will be time to start reanalyzing again and looking for support. Something like moving averages and horizontals. So it would be nice if we can go ahead and break this down, because this has been going on for a while. What are we on, like 2 hours now? And there's still like another hour worth of going into this close is an hour away. It's the best time to be paying attention. And if this just goes sideways for too much longer, then I'm going to have to log off. But if this thing can break down, then there's definitely going to be a few more things to talk about. And I love going long. The only thing I think about is somebody they're not watching live and they're seeing this show is up and then they see that it's 2 hours long. And they're like, what the hell? Go screw yourself. I'm not watching this. I don't, I don't like. It's a detractor if somebody sees that this is 2 hours long or longer. That's like the thing in the back of my mind. But whatever. Well, you kids keep playing touch butt in the park. I am making money. That is awesome. Nate Diaz reference. I'm a huge mixed martial arts fan, and we got big fights coming up this weekend. Well, I guess, I don't know if plural, but definitely one. Khabib Nurmagomedov is fighting, and he is fighting Dustin Poirier, and I am really excited to watch that. Definitely saw Nate Diaz's last fight, and he kicked some butt. Man, did he look good. Okay, come on, Candle. All right, so what I'm going to do now is just take a look at a couple even smaller time frames. And this is a good example of why I'm not sure why it took me so long to pull up the 3 minute, but I do like the 3 minute. I do use it, and I don't trade it unless I am just practicing a strategy or something along those lines. But this is a situation that I see time and time again where you get a bit of a bullish pattern that traps people in at the top. I'm seeing this as a pretty clear ascending triangle or bull flag. I would call it an ascending triangle. But I wouldn't have any confidence in this thing because it's on the 3 minute. It's at resistance. We're exhausted. If we do break out, I think it would just be a trap. So after a big move, and that's why it's important to understand limitations and stuff like that, is knowing that you want to bet on strong trends but not exhausted trends. And if I was getting something like this and the price was up 5% only for the day, now I feel like it's an area where I can go ahead and execute an entry. Whereas if we are seeing something like this at resistance after like a 10% move, now I'm going to say that this is not a pattern I'm going to trust. And that's what's most important to me, is that patterns are easy to spot for most people. Once you start learning them and looking for them, it becomes kind of everybody starts seeing the same pattern. And the way to have an edge is to distinguish the best patterns from the worst patterns. And even though this sure looks good as an ascending triangle, even say that this was like maybe a little higher time frame, even though this looks good, I don't like it because it's following such a big move. Let's take a look. The ADX has cooled off on the 3 minute. Yes, and the price has returned to the moving average. Notice the distance from the moving average on the 3 minute. That really nailed that top. Okay, so we are wanting to now pull up the 9 EMA. I'm usually only using 2 moving averages, but that's because I find that it's not that often that the other one is needed. And this is a great example of, we're way up here, and I'm looking for a breakdown, right, and a reaction. So what I will look for is this 9 moving average to make a bearish cross with the 50 moving average. And specifically, like price getting squeezed in between these moving averages while it happens, or a breakdown and a throwback, that would be perfect. And that is potentially like when I was looking at candles for confirmation for the market being ready to reverse, this may even be a more important tool for me, is these moving averages crossing over on like the 3 minute. Let's just take a look back here. Look how close, and they did actually cross, but instantly recrossed. So you see that when price kind of gets squeezed in between these, it is showing that price is ready for a move. If it can cross, and then break down support. So as those were crossing, what would we have been doing? We would have said, like say this is crossing right here on this candle, but barely. We'd be looking at horizontals as areas for confirmation. And if that crosses and the horizontals get broken down, now you really, now you got something. And that's what I'll be looking for here is price getting squeezed in between these EMAs on this trend line. And if it crosses, then I'll have some horizontals that I'll look at. And then I would basically be zooming out and looking for areas of support. And now we've only got an hour left. The reason why I need this thing to react sharply is often, the reason I need this to react sharply is because we've got 1 hour until the close. And if this thing really closes above 10,375, then that is starting to kind of become a problem. It wouldn't be as long as we're below this one, but it would start. I'm really wanting a reaction here, in a kind of a bearish wick off of this daily candle, and closing below this resistance, which would reek of a trap up in here. And like I said, I think this is a great selling opportunity, but if we have a strong close, then that does kind of start to change some things. I still wouldn't be covering because of how spread out these are, and I did go over specifically what my stop would be. So let's take a quick look at the daily. Look at how strong that would be if we closed up in here. A lot can happen in an hour, but we're seeing that the price is just refusing to pull back like I'm wanting. So a lot can happen, but it needs to start happening sooner or later. I mean, pull up a trend line. I'm wondering if there's any way to make this work. Kinda, not really. Okay. Yep, we'll look at the SAR real quick. And look at that. Absolutely beautiful. Like I said, this isn't a problem right now, but it can become one quickly. That's why it's important to pay very, very close and have a very strong idea of what you're going to do if certain things happen. And this 10,600 is a very important boundary. And the SAR agrees. So if this thing is still failing to make a move, I am going to have to call it, because it's going to be probably another half an hour of it, just sitting around in here. I guess it's if this broke down, it would have been ready for a sharp move, and that is a pretty bearish close on the 15-minute. We did get down there, but it is about time for me to call it. So definitely keep an eye on this next hour. It's just as important as it can get. If we close back down below the 200 EMA on the 4-hour chart, if we close below 10,265, that looks like a long way, but it's only, $150, and we can definitely do that in an hour. And if we do, then that is just going to be a beautiful sell setup with that huge reversal candle with the wick above the 200 EMA with the close below. If we close above 10,400, if we can just keep staying up there, that's going to just be a very bullish close on the daily and on the 4-hour. And if that happens, I'm going to really be thinking that that it's time to exit shorts and move forward. So the plan is to hold through the moving average crossover with the 50 and 200 EMAs. That is my stop loss, 50 crossing above 200, but will potentially be starting to scale out a little sooner if we don't see a nice little move down from here back down below here, and that is what I'm expecting. But I don't think I will have time to hang out and see what happens live on air. We have been going for plenty long enough. I really appreciate anybody who stuck through 2 hours of looking at charts. There were a couple times where I went on a couple tangents, but I think there's some really good stuff out there. Take a look at the Practical Fractal video on YouTube. Definitely keep in mind this Wednesday, that'll be a great start to a show that we'll be doing on a regular basis. Really excited based on how the first one went, how much there will be to learn, and the format of having somebody who has been, just learning how to trade over the last year, having him be there to ask questions to me and to really make some trades in real time will, I think, just be the single best way for viewers to learn. So really excited about that. Oh my gosh, I meant to look at Ethereum and I didn't. So guess what? We are going longer because this isn't actually important. ETH BTC, I think, is showing strong signs of a selling opportunity. ETH USD as well was something I wanted to look at. Much more bearish than Bitcoin. Notice how, it's just every step of the way. It's been amazing. Bitcoin gets all the way back up to throw back and retest this guy, right? And it's not showing any sort of signs of a reversal candle just yet on higher time frames. But look at this on Ethereum. Much different picture. That's the shooting star I want to see on Bitcoin. It failed to get through horizontal of 180, which this is what I wanted to see on Bitcoin, is that it threw back to 10,000, snuck above, wicks above, and then gets a bearish cross and then continues to the downside. So now I'm really starting to wonder, because I've seen this multiple times, a number of times I've seen this where Bitcoin gets this strong rally, which really puts things in danger of correcting or reversing things and really gets you scared, whereas Ethereum just doesn't. It just doesn't, and it makes me wonder if there's this added demand of people buying Bitcoin with Ethereum and altcoins, which is making it just juice up a little bit more than it would be expected to otherwise. And then while these just don't really, get that same counter trend correction, and then it leads down the market. Like if alts break down from here, so far it has been kind of leading Bitcoin down. That's something I'm paying very close attention to, and that relationship could change in an instant. So we're looking at ETH BTC. This is a sell signal too. This is a sell opportunity. If it were me, maybe selling a little bit here and then holding, entering 25 to 50% here, and then saving for a retest of this 200 EMA to add more. That is a decent option, but the best trade in my mind is still shorting alts against BTC. Yeah, look at that. Breaking down. On my notepad, I have add to ETH BTC short, question mark, question mark, question mark. And it's like, man, I've got such a big position, but this is one of those trends that I just like. I just love hammering when everything is there and everything keeps, you keep getting more and more signals. It's like, this is just so much preferable. Like I've got a much bigger position short ETH BTC than I do Bitcoin USD, and it's much this is just a much better trade. Bitcoin, that's a headache. Like, I got sell signal and I took it, but I've got a relatively small position that if it goes against me, it's not going to be a big deal. Whereas this one, I've got a big position, and it would hurt, like if this didn't move my favor, it would have really, really hurt. And that's where I like to, markets that are trending and moving in your favor, that's where you should be focusing on. And just let everybody else worry about what Bitcoin's doing and just go for the best trade is often what I think is, what people could do a lot better at is if they just found the best trade that they can find and then just go with it. Sometimes that'll be long Bitcoin, and then maybe sometimes I'll be short alts, maybe sometimes we'll be long alts. I don't know. For me, the best trade has been for a while short Ethereum, and I talked about going short from 0.025, but I've really been short this thing publicly since up in here. And I should probably go back and look at my Twitter because I definitely have some good calls of when this thing broke down 0.075, I called for a return to 0.025. And it seemed crazy at the time. That was an enormous move. And I mean, it just went straight there with like no sort of counter trend move, just a straight dump off. This was basically allowed my 2018 to have a higher return on my investment than 2017 because I was shorting Ethereum aggressively. And I think that the same thing may happen this year for me, just in terms of, so I shorted heavily here on this breakdown here publicly and targeted here. I would have trimmed here and then gotten all the way out here. And then I have been kind of staying out for a while. I did get long, got some buy signals. The moving averages do a great job of getting you long before these big moves happen. And then I got really, really excited once this broke down, this guy, because I just had flashbacks of this, having major boundary breakdown and knowing what can happen. This just death spiral. So I got really excited when this guy broke down and started, really entering big. And now I'm looking at a setup that's really beautiful in a market that's been moving in my favor. Everything's been playing out great. So now I'm really wondering, am I going to go ahead and pull the trigger on, really adding to this position today due to this descending triangle that is almost certainly going to confirm with a close below that would have a long move to go in about 50 minutes. So a descending triangle with a close below would be the signal to go ahead and add. And I think I'm probably going to do it because I see so much room to the downside. 0.008 is my target. And yeah, so this is important. I'm glad that I didn't forget to look at this chart because this is the best trade in my opinion. Even if Bitcoin short doesn't work out, it won't matter because my account will be up so much more. If I get stopped out of my Bitcoin short, it's around break even, maybe a little bit of profit because I trimmed, or maybe a little bit of profit if I get out at a good or better place than we are now. And if I get out, it's just a small loss, no big deal. It doesn't matter because my account has been increasing, significantly because of this chart, and that's why I think it's important to find your best, what you think is your best trading opportunity, and focus your time and your energy and your resources on that. Even if Bitcoin is what drives the market, for me, by far the best option is shorting alts against Bitcoin. Alts just had major death crosses on the daily. And I'm not telling anybody to do any of this. I'm just sharing my thoughts. On the daily, alts just had major death crosses with the 50 crossing below the 200 and on the USD pairs. And Bitcoin is still fully bullish. So you've got alts that are entering bear markets based on how I determine bear markets, and Bitcoin, which is a fully long-term bull market. And you have the chance where you can short the alts against the Bitcoin. And that's the trade as far as I'm concerned. Because it's going to be very hard for alts not to lose value against Bitcoin as long as they have death crosses on the daily and Bitcoin has golden crosses on the daily. So that's where I think that this is a great opportunity, and that's why I like also trading multiple markets, is that sometimes, if you expect maybe 58% of the trades to go in your favor, which is what I expect for myself, the strike rate of 58%, if that's what you're expecting, well, you can flip a quarter 10 times and have it come up the wrong side. So if you're only trading Bitcoin and that's it, you can have a lot longer stretches of break even or small losers or maybe small winners. Whereas if you're trading multiple markets, with the same strategy specifically, now you can decrease the standard deviation in the amount of variance that you experience. All right, I just got another tip. Excellent. And that's probably why I'm going so long. All the tips you guys made me feel so good. So Jacques Hugo, hey mate, just want to say thanks. Please spend this tip on beer. You got yourself a deal. I'm not drinking tonight because I had way too much last night, and I'll probably take a couple days off, but I will be very excited to put your money to work. I wonder if you're the first to tip, and that looks like Great British in the pound. I think that is my official first tip, and I think the Fabric King tipped in euro. So if I'm correct, I think I've got my first tip in the 3 major Western currencies. So that's pretty neat. All right, so yeah, definitely keep the eye on that. What I would want is a close below here. If that happens, and it looks like it should, then I'm probably going to go ahead and add to this position. Just sometimes, and sometimes you just got to hammer it. If you really are confident in a trade, sometimes you just have to hammer it if you're managing risk properly. And this is something that Gabriel and we talked about on the practice episode, which is a hugely important topic that we'll be talking a lot about moving forward. And that is that I will very much like to add 2 positions after I have moved the previous entry stop to break even. So like when I'm entering up here at 0.025, and then we get like this guy. I'm not sure if I added or not, but generally I wouldn't want to add to my entry at 0.025 until my stop loss was at break even. So definitely when we got down in this action right here and broke this down, I felt very comfortable moving my stop loss to break even. And when I move my stop to break even, that means I'm not risking any money. Outside of a 0.01% freak situation where something happens which really just shouldn't, if my stop loss is at break even and I've got a stop market order at break even, then maybe I lose 0.5% on fees or something like that, but essentially what it means to me, when I'm entering, I'm determining my position size based on how much I'm risking. And I don't want to risk more than 2% of my bankroll on average. Sometimes I'll go a little bit more. But let's say I enter and I'm risking 2% of my bankroll, and then it moves in my favor, and now I move the stop to break even. How much of my bankroll am I risking? 0%, right? Or maybe, 0.001% or whatever. So if my stop is now moved to break even and I'm risking 0% of my bankroll, well, now I can make a whole new entry risking another 2% of my bankroll, and kind of keep repeating as it moves in my favor, and I keep adjusting stops into break even. I can keep adding and not without risking more than the 2% of my bankroll, and then all of a sudden I get in these massive positions that it seems impossible that I'm not risking more than 2% of my bankroll, based on, it's like I almost got my whole bankroll entered here and my stop loss is way more than 2% above this price. But then you look back and you see that the average cost basis and the average stop loss is, maybe roughly the same, or maybe you're in profit. So that's a very important topic. And again, what I'll be focusing on is this show is teaching how to analyze charts and teaching technical analysis, but that's not near as important as learning how to trade. And that's a great example of how to trade versus how to analyze. How to build a huge position without risking more than 2% of your bankroll is absolutely a skill to have. And this is the time when I want to be doing it. When I'm very confident in a position and that position's moving in my favor. So as I've blabbered on about that, now it looks like we might be trying to finally break this down. No, not as close as I thought. So again, and here's where I'll even sometimes add a fourth moving average. And again, you guys are the best. Anybody who's sticking with me over 2 hours, you are awesome. And pulling up this real quickly, just adding a 4 moving average to my chart. Same thing that I was kind of talking about, why we added the 9 is as we are testing that 9 and we are wondering, like as this candle looks like this right here, we're kind of wondering, is this really, gonna pull back, or is this not, is this gonna maybe even continue to the upside? And that's where these moving averages can be very, very helpful. And again, we see that these have had a hard time crossing over when there's been a correction, and these haven't crossed over, then you continue. So seeing the same thing here, whereas like if they don't cross over, watch out for continuation. And this is where Tyler would say you don't even need the price, and I agree. When I have a very short-term time exponential moving average on, you really don't need the price, so you can just kind of take that off and look for these to cross over as confirmation that this boundary is ready to kind of break down. So let's throw that price back on, and we've got 40 minutes until the close. This thing needs to correct for me to feel comfortable about things. We've only got 40 minutes and it's sure getting close. Okay, now we're getting a little bit more of a wick. We see how every $20 in price is important. And we've got the 3 minute that has had the bearish cross with the 4 and is now kind of getting squeezed between the 9 and the 50. This last candle did close below the 50. It gave us our lowest close on the 3 minute since back in here. So that's definitely important. Let's look at the 5 minute. Just broke the SAR. This thing, it looks like right after I log off here, maybe like just the last 20 minutes of this candle is going to be where it looks like it will be very, very ready for a sharp reaction to the downside. And if that happens, it doesn't take, 20 minutes will be plenty of time. So as it stands, I have gone way longer than I ever imagined I'd ever go on a single show, almost 2.5 hours. Originally, I was trying to focus on keeping them short. I had some people reach out and give me positive feedback about longer shows, which never really happened before, which is why I was trying to focus on keeping them short. And since some people have, said that they really like the longer shows, now I've been letting myself go a little bit longer. This is kind of ridiculous. I was excited to analyze the price action during this very important time, but I probably should have started about an hour later because I really wanted to, this leading into the close here that will happen in 40 minutes. That would have been the best time. The best time for my schedule is in the earlier afternoon to go live, and maybe I'll have to adjust that so that I am going live much closer to these, like right now, so that when the daily candle closes, I'll be there and ready. And that is when volatility does occur for the most part, is during those closes. So that is a good time to do them, and I will continue to keep my eye on the charts. I appreciate Marcus Dalla wanting to wait until the daily close. I am definitely interested in that, but I need to get myself to the hot springs. I am very much in need of my daily hot springs meditation session, which is a very important part of my daily routine. So I will be going to do that and getting some dinner in me, and then we'll be keeping one eye on the charts to just kind of see there. I'm not going to be doing anything in the next hour or two, so it's a good time for me to step away, clear my head, and then after the next couple hours, things could definitely change. So keep an eye on my Twitter. If there is a quick update that I'm wanting to provide, that's how I will do it. And if you are wanting to know more about where my stop loss is and if I'm still in my position, do me a favor and just watch this video carefully. I'm always sharing my stop losses, and it should be clear. If it's not, feel free to ask, but it should be very clear. And if only one or two people are asking, I try to get back to everybody's messages, but I'm going to stop getting back to messages that are you still short? What is your stop loss? When I am spending so much time to share that with everyone. So if you are sending me messages along those lines, I am going to start ignoring those. And outside of that, definitely feel free to reach out with any questions. Keep an eye on that Twitter. If I do decide to do anything, I'll probably send something out there. And in the meantime, I will be looking to get some rest, recover, and get back into action tomorrow so that I can get those tutorials uploaded and be ready to go with our new show on Wednesday with Gabriel. So thank you guys very much. Anybody who stuck around for this long, you are the best. I love you very much, and I will plan on catching up with you tomorrow. And YouTube's new software still sucks, so they log me out.